this is the slideshow. And of course, it features, if you can see that clearly, it features this gentleman, Donald J. Trump, who was 45th president of the United States. And with 95% certainty this morning, we can predict that he will be the 47th president of the United States, to be inaugurated on 20th of January next year. America has decided. And not only that, it looks very much as if President Trump will control the Senate. He will have a Republican majority, albeit not a huge one, in the Senate. And it's quite likely that he will have a majority in the House of Representatives as well, although we won't know that for sure until probably the weekend. So we start with a historic moment, and at a very interesting time in global affairs. I'm going to just move to the next slide, but it's, yeah. So I normally look at the world through three prisms when we convene these meetings, in terms of politics, financial markets, and geopolitics. And obviously in terms of politics, this morning, and probably for the next few months, USA politics will dominate the news reels. But of course, there's a lot going on elsewhere, not least in the UK, where we've just had a major budget last Wednesday, which I'm going to discuss. You can summarize that budget in terms of tax, borrow, and spend. We've gone back, my friends, to the 1970s with a socialist style government, having been through a period starting with Margaret Thatcher and then through Blair, in which the UK was positioned somewhere halfway between Europe and America in terms of the tax burden and in terms of welfare provision. But the irony is that, having left Europe, we are now becoming a much more European style country in terms of our fiscal profile and in terms of our benefit system. We are becoming effectively France without the croissants and the wine. Across the channel in France itself, we have a budget stalemate, and there are some interesting parallels between the UK and France right now, which I shall try to unpack. Our friends in Germany, still very much the largest economy in Europe, appears to be in recession, although there may be some prospect that there will be some growth next year in 2025. Despite all the various political perturbations, equity markets are holding up, albeit with certainly a high degree of volatility. There are still inflation fears, as Eurozone inflation ticked up last month, and the gold price continues to surge, something that we've been has been a theme in these presentations over the last 3 months or more. We're also concerned by an uptick in UK borrowing costs as measured by the UK gilts market. But it's worth noting that US Treasury yields are also ticking up, again, for political reasons. In the geopolitical domain, my goodness, we've had an exchange of missiles between Israel and Iran, with the entire region of the Middle East on the brink of all-out conflagration. The moment of deepest danger seems to have passed for the moment, but that is an extremely concerning state of affairs, with no immediate end in sight of the Israel-Hamas and Israel-Hezbollah or Israel-Lebanon war. Russia-Ukraine, some developments there, and I think now with the advent of a Trump victory this morning, we're going to see a rapid evolution on that front, something which I would like to discuss. Just in terms of the UK, well, the mantra that Rachel Reeves, the UK Chancellor, uses is invest, invest, invest. But of course, the issue is whether this is public investment or private investment. And all of the investment that she proposes is on the public side. Apparently, bunging another 22 billion in the direction of the National Health Service is considered investment, even though we know that it's poorly managed and that the entire system is a bit of a black hole, quite frankly, with an enormous number, over a million people on its payroll. Our tax burden in the United Kingdom is going to rise by 40 billion next year. and 25 billion of that will be attributed to higher employer costs, as exemplified by employers' national insurance contributions. And that arises because the actual rate went up from 13.8 to 15%, and the threshold above which it is payable was lowered from 9,100 to 5,000 pounds, meaning that even occasional or part-time workers will be liable for employers' national insurance contributions. As higher capital gains tax on share transactions, up from 18% to 24%. Inheritance tax is extended in scope. It will be applied to defined contribution pension pots. And, there's a lot of people out there who are using their pension pots to draw down over time in the expectation that if they pass away, they would be able to leave those pension pots to their heirs without inheritance tax. But that is no longer going to be the case. And indeed, the farmers have been hit hard because agricultural capital relief, that's to say inheritance tax on farmland, is to be extended on to any land or farmer assets in excess of £1 million. The farmers are absolutely outraged by this move, and there will be repercussions, as I discussed in the video that I did with Sarah Lowther on Friday. Government spending is going to exceed something like 44% of GDP by the end of this parliament. We are going to, we heard a few months ago about two-tier justice. We've now got two-tier pensions, because effectively you've got a different system applicable for the 6 million workers who reside in the public sector, as opposed to those less happy pension savers in the private sector. The non-dom regime is to be dismantled. Well, there's going to be some kind of new residency regime, which we are told will be internationally competitive, but we'll have to wait and see. I think we have grounds for skepticism. And if you look at the OBR's predictions for growth towards the end of this decade, as this parliament progresses, we're looking at not particularly inspirational numbers like 1.2 or 1.4%. So, the dynamic growth that the Starmer regime has promised us it seems to be receding, and I very much doubt that it will be attainable. Sir James Dyson, the inventor and designer, and also, by the way, a major landowner these days, has called the budget spiteful, and I think that I would endorse that term. It's pretty depressing, really. Over in France, they've got something similar going on, because the new government of Michel Barnier tried to get a budget through the Assemblée Nationale and failed to do so. In fact, it's been thrown out. So France is currently in a kind of a fiscal limbo. They don't know what the tax regime will be for 2025, although it does seem, there were a number of parallels, including punitive taxes on people riding around in private jets. And more to the point, in terms of the popular perception of the budget, French pensioners, and I do know one or two myself, even members of my own family, will not get their increase until 1st of July, I think, rather than 1st of January. And there's a lot of muttering about that. The French, like the Americans, are talking about the failure of democracy, and this arises from the inconclusive legislative elections, which Macron quite unnecessarily called back in the summer, which led to a completely indecisive result. And by the way, a yield on French bonds, French Trésor bonds, used to finance the French government, the deficit, which amounts to about 6% of GDP. These yields have been heading up, and France has been one of the few major European stock markets which has actually receded over the course of this year to date. So not a happy picture. Looking at the EU as a whole, well, in their wisdom, the European Commission has decided to impose additional tariffs on the import of Chinese electric vehicles. And that's up to 35% of the import value. That's in addition to the existing 10% tariff. The Chinese, as you might imagine, are extremely unhappy about this, and they're going to take the European Commission to the World Trade Organization by way of complaint. You know, Germany is still mired in recession, or zero growth, or a shallow recession, although recent forecasts suggest that inflation will be lower next year and that wages are expected to rise, which will generate, hopefully, additional consumption. So maybe some light at the end of the tunnel. Over in Japan, I just learned that Jim has just returned, so he will know more than I about the actual mood on the ground over there. But this gentleman, Mr. Ishida, called a snap general election, a bit in the manner of Emmanuel Macron, in the expectation that he could consolidate his authority and increase his majority in Japan's parliament. And it's backfired because the Liberal Democratic Party, which has been the ruling party in Japan for most of the years since the Second World War, is now actually a minority government, although he is still prime minister. Just worth noting that actually the Nikkei 225 is still pretty buoyant, but it's well down from its all-time highs, which were recorded back in July this year, when it reached 42,000. Remember, Japan took decades to recover from the property crash of the early 1990s, and endured decades of deflation, and still has effectively zero interest rates. So the news is coming in thick and fast this morning from the United States. Harris has postponed her address. That is almost in itself an admission that she has conceded the election, but we will no doubt hear from her later. As I convened this meeting at 10 to 8 this morning, I think Trump had secured with 95% probability about 266 votes in the Electoral College. And as you know, he would require 270 to get a majority. If he gets 271, he is undoubtedly the 47th president of the United States. And it all hinged on these 7 so-called swing states: Michigan, Wisconsin, Arizona, North Carolina, Pennsylvania. I was asked last week in the video, who did I think was going to win? And my reply was, I didn't know, because nobody knew, because it was really on a knife edge. But that because 3 to 4 of the swing states, which all are well represented in the Electoral College, would probably go the same way, we would probably know the outcome. The outcome would be decisive by early on Wednesday morning. And in fact, that is what has happened. So we are not likely to have any long disruptive and damaging hiatus. You remember 2020, the hanging chads, when the presidential election was not resolved until mid-December. Fortunately, that's not likely to be repeated. We will very quickly be hearing from Donald Trump in terms of the roadmap for his administration. And we were just chatting before we went live that I suspect that he will call for a ceasefire in Ukraine in the almost immediate future. He's almost certainly won the Senate with at least 51 seats out of the 100-seat legislature. And as I said, we'll find out about the House of Representatives very shortly, but that's likely to go Republican as well. Now, on the Ukraine front, the essential news is that the Russians have been making advances on the Eastern Front, that is to say the Donbass and in Lugansk, possibly quite significant advances. But in geopolitical terms, something quite sensational has happened, which is that Russia is deploying in the order of 10,000 troops supplied from North Korea. So Putin's close fraternal ally Kim Jong-un has sent these troops in solidarity with Russia's campaign against Ukraine. But significantly, and this is meaningful, those troops are being deployed in the Kursk Oblast, which is, of course, Russian territory. But it's Russian territory that has experienced an incursion by Ukrainian troops. If North Korean troops were to be deployed in Ukraine proper, I think that there would be diplomatic repercussions, and that would have some impact on any likely negotiations that are possibly going to unfold in the near future. Note also that the Russians, Putin's regime, has been creating political instability on the Ukrainian periphery, most notably in Moldova and also in Georgia, both countries which were formerly constituent parts of the Soviet Union. And there's credible evidence that Russian dirty tricks are in play there, although that is actually quite difficult to prove, but anecdotally, that is the prevailing opinion. Last week, rather chillingly, Russia carried out a dress rehearsal for a nuclear attack on the West. So make of that what you will. I think Mr. Trump will be having a telephone conversation with Vladimir Putin in the very near future. And for what it's worth, that's also the opinion of someone I met quite recently by the name of Nigel Farage. Just looking at the overall global top-down analysis, dollar slightly softer, as one might expect, although the pound has weakened against the dollar in the last week or so. The gold price is stonking away, 2,760 per ounce. The oil price, this is a little bit of a difficult one to fathom. It's been quite soft despite all of the geopolitical tension and the near conflagration in the Near East. And my explanation for that is that, that there are no supply side issues coming out of the Gulf. And of course, America is producing huge quantities of oil and shale gas, and there's no immediate threat of a shortage of energy. It's worth noting that global debt levels are still rising, and according to IMF numbers, they hit 320 trillion. You know, it's an unimaginable number in Q4 this year. And that reflects the fact that debt to GDP ratios are increasing across the developed world. Now, incredibly, the fiscal deficit in the United States hardly became an issue of debate during the recent election campaign. And, it does seem that almost, certainly that if Trump cuts taxes, the American fiscal deficit is going to exacerbate even further. And, people have been predicting consequences of that for a long time. Eventually, something nasty will happen. There are now 7 $1 trillion companies in the world. You probably know what they are: Apple, Microsoft, Alphabet, Amazon, and Meta, and Nvidia, of course. And they are also amongst the world's leading brands. They seem to be, for now, invincible on the back of this huge tsunami arising from the advent of artificial intelligence. Just something interesting, which, again, Jim will know more about than I do. There's this interesting Chinese crackdown on tax evasion and its consequences, which is putting off some Western investors. I'm conscious of time, so I will be quick. UK rates are on hold for now, but inflation appears to be relatively under control. But the debt to GDP ratio is something that is called into question. And further to the Chancellor's budget last Wednesday, the money markets, particularly the gilt market, has been expressing skepticism about Rachel Reeves' ability to get that debt to GDP ratio down, which she aims to do. Growth will probably come in at around 1.2% next year. Again, it's not dismal, but it's not particularly good when you compare it with the United States or with our friends in Eastern Europe, the Poles, for example. Consumer confidence is down. Widespread dismay, I would describe it, about the impact of Rachel Reeves's budget. Over in Europe, well, rates are still at 3.25% for the deposit facility, as determined by the European Central Bank. Very quickly, just to say that actually the European markets have not, the equity markets have not done too badly this year, with the exception of France, and that French yields are up, as are German yields on government bonds, and the spread between French and German bonds is widening further to 76 basis points, which expresses market concerns over the fiscal and political drift in France. Over in the USA, well, Fed funds rate is currently floating at around 4.83. Inflation is down. Equity markets are buoyant with recent resurgence in tech stocks. You remember last year we observed that Nvidia was under pressure and that it had lost quite a lot of market value. Seems to be back. But what do you make of this? I mean, if you can answer this one, there might be money to be made. Buffett of Berkshire Hathaway has reportedly sold over 90 billion of stock in the last month. And according to one report I read, is sitting on more cash than the Federal Reserve. Should we be worried? Does he know something that we don't? I'm not sure. 10-year bond yields, the Treasury is up 4.3, very similar range to that which is now being paid by the UK government, which was 4.5 this morning. So I won't keep you any longer, but there's a lot of stuff going on, and one has to follow these things very closely. I think we're in for a turbulent time, both in terms of markets and in terms of politics, in the months to come.